Here's a quiz for you. Imagine person A makes $100,000 in a year. Person B makes $50,000 in a year. The question is, who is going to pay more tax? Well, obviously, person A, the one making $100,000, is going to pay a lot more tax than the guy making $50,000. Ha! In my cunning and devious way, I have tricked you. You have been fooled yet again. All right, so here's what's going on. Not all money is created equal, or equally. I don't know, whichever one it is, equally. Anyway, not all money is treated the same in the eyes of the IRS. And this is a very big idea with ginormous repercussions. Think about it. If you can make $100,000 a year and pay less tax than your neighbor who makes $50,000 a year, don't you want to know how you can do that? So, let's get a feel for how the IRS looks at different sources of making money and how they tax each. The good news is that there are really only 3 types of income to worry about. But honestly, I don't even like to use the word income here because when most people think of income, they think of working at a job and getting a paycheck. And yes, that is income. But some of these others don't require you working a job at all. So when I say income, keep an open mind as to what income is. The first type of income the IRS cares about is called ordinary income. Now, this is not to be confused with extraordinary income, which is pretty much Adam Sandler's salary for every movie he's ever been in. Okay, no, not extraordinary income. We're just talking about ordinary income. But what is ordinary income? Well, it's almost any kind of income you can think of. Yes, it's the income you get from your job, but it's so much more. If you rent a room out in your house and get paid, this is rental income, and it's considered ordinary income. If you own a bond and you receive interest, this money is considered ordinary income. If you babysit, that's ordinary income. If you have a company that makes papier-mâché hats, this is ordinary income. If you write a book and I buy a copy from you, guess what? That's ordinary income. If your cat video goes viral on YouTube and you get money from the ads, that money is, wait for it, yep, ordinary income. Again, almost any income you can imagine is considered ordinary income. So what's the significance of this though? You may like to earn ordinary income, but the IRS really likes it when you earn ordinary income. Why? They tax it. They get a piece of it. The more you make, the more they get. And it gets worse. My daughter loves thick, cheesy pizza. If I only had one slice of delicious pizza, I may try to hide it from my daughter. Please don't judge me. It's pizza. But sooner or later, she'd see me eating that delicious slice of pizza. She would ask, and then beg, and then cry, and then sulk, then demand some of my delicious pizza. How do I know her precise emotional response from pizza shunning? Yeah, don't ask. Ordinary income is delicious, cheesy pizza. The IRS knows you have it and will do whatever it takes to get some of it from you. And not just a little, but a lot. They love it, and they want a good part of your slice. If you don't give it to them, they won't beg, cry, or sulk. They go straight to demanding it, and then to locking you up in prison. Yep, that's pretty much ordinary income for you.